Chapter 10 is dealing with payroll tax. Payroll tax is a state-based tax, and as you can see from this slide, the rates and thresholds vary amongst the states. So with most states, if your monthly wages exceed the threshold, then you will pay tax on the excess. So for example, if you're in New South Wales and your monthly exceeds 56,500, the rate is 5.45. Compare that to Queensland, where the monthly threshold is 83,000, and if you exceed that, it's 4.75%. Even though the rates and thresholds differ from state to state, the treasurers of the various states and territories have announced for the first time ever a national overhaul of the payroll tax arrangements. So what's happening is there is a harmonisation program whereby the taxable wages are being made more consistent between the states. Published in the book, you'll find a list of the relevant websites that relate to each state, and usually the procedure would be to, I guess, register with the Office of State Revenue in your state, and then you would complete a monthly payroll tax return, and those returns can be completed and also lodged electronically. One of the things that you need to, I guess, look at is now most states, the payroll tax will be payable on Australia-wide wages, not just the wages in that state. So, for example, you may be beneath the taxable wages threshold in one state, but when you add the states together, you're over the threshold. So in that case, what happens, you would calculate payroll tax on your Australia-wide wages, and then you just multiply it by the state wages over the total Australian. Some people will attempt to, I guess, bypass the payroll tax regime by registering a separate company, but just be warned there that if one company is a subsidiary of another, or if they're substantially the same ownership and control, well then they're grouped together for payroll tax purposes.